Hi and welcome to the revision class of lesson number 17, Time, Value and Place of Supply. This revision video is aimed at covering your chapter in a very fast, quick, exam-oriented way, and this is meant for your one day before exams. This is going to be very quick, just short to the point, just enough for you to brief and brush up your syllabus quickly. Okay? Yes? So without further ado, we are going to be seeing what is a taxable event. Taxable event means an event or a situation at the time of which the taxability will arise. When you sell something, when should you pay GST? That time of event, whenever you are supposed to actually discharge the liability to the government, that is the taxable event. Event or situation which gives rise to taxability. What is time of supply? Time of supply is the point in time when goods or services have been deemed to be supplied. So whenever you determine this is the time of supply, so when is it? When you give invoice, or when you actually provide the service, or when you receive the payment. So there are a lot of events, right? So out of these events, which is the event on which you will actually have to discharge your GST is called the time of supply. So the time of supply will broadly cover forward charge, reverse charge, time of supply for vouchers and some other cases which is miscellaneous. For time of supply, so there is section number 12 and section number 13. Section 12 comprises of time of supply for goods only. So whenever you read section 12, then it means it is applicable only for goods. Section 13 is applicable for services. Fine? Okay. Alright. So first, the liability to pay tax on goods shall arise at the time of supply. Means what? Let's say I sold something to you. When should I pay the tax to the government? So the time of supply rules, the sections will tell me when I am supposed to pay GST to the government. So first, coming to the forward charge mechanism. You know what is forward charge mechanism? That is, this is the supplier, this is the customer. So this supplier is in charge of collecting GST and paying this to the government. So under forward charge, the supplier, whoever supplies the goods or services, is responsible for paying the taxes to the government. Under reverse charge, it is ulta. Same, the customer, whoever receives the whoever receives the goods or services is liable to pay tax to the government. So in our first case, we will be covering forward charge mechanism for goods, the time of supply for goods. Under this, so there are three instances. So there are three events that is going to happen. The date of actual issue of invoice by the supplier. Let's say I gave you, I'm a chartered accountant, I filed your income tax returns, I did something for you, I issued my invoice payable to Raksha and associates, whatever, on 1st January. This is my invoice date. Then last date on which, sorry, we are talking about goods. So let's say I sold some goods to you. Okay. So first, in our case, we are talking about goods. So I sold some goods to you. Then I raised the invoice. First, last date on which the invoice was required to be issued. What is the last date? What is the time limit for which I should have issued? Let's say I sold the goods to you. After 1 year, can I come and give you the invoice? Yes. So here, that will be determined under the provisions of section 31. That will be just seeing in a bit now. Date of issue of invoice. Okay, last date, let's say the last date on which you should have the time limit for issuance of invoice was 30th January. Then here, please make a note, this is very important. Earlier it was there, date on which the supplier actually receives payment. So three things were seen. So under the section, this is still there. But by virtue of a notification, it has been told for supply of services, even if you receive the payment, this payment should not be seen. So for supply of goods, time of supply of goods, the date of receipt, the day on which you actually receive the payment from the customer, that is irrelevant. You need not see that. So when you compare for time of supply, only two things you will see. The third thing is also there. It has not been struck out in the law. Don't mistake it. This is also there. But by virtue of a notification that they're saying, this will be applicable only for services. You have to see the date of receipt of payment only for services and not for goods. You don't have to compare and see earlier of the three. So in this case, let's say my earliest date of these two, earlier of the two is this, and this will be my time of supply. On this month I will have to discharge GST to the government. Clear? Okay. So coming to section number 31, which talks about the last date for issuance of invoice. Now there are many cases under this where the supply involves movement. Let's say from Karnataka to Delhi, the movement of goods has to happen. If it involves movement, then invoice must be issued before at the time of removal from the factory gate itself. When it's been removed, at that time itself the invoice has to be issued. Next, when there is no movement, where there is direct delivery, I go to the Chroma showroom, I buy a laptop, direct delivery, no movement of goods. Then on or before delivery, before he gives me, at the time he gives me the laptop, then he will have to issue invoice. In case of continuous supply of goods, let's say there is a contract for supply of, let's say, gas or anything which says for next 6 months I will be supplying these goods. Then if it is a continuous supply of service, then before or at the time of issuance of periodical statement or receipt of periodical statement, it's like a bill or any statement which covers the supply. Then goods supplied on approval or sale or return basis. Approval for sale or return basis means what? Let's say I'm a handicrafts or a, pure, I sell cotton sarees, for example. So now I'm sending, let's say, 1000 sarees to a, let's say, a trader. He wants to see, he wants to assess the quality, he wants some time. So he will tell me, send me the mal, I will look at it. If I like it, I will keep it. If I don't like it, I will return it back. Okay. So this is called sale or return. Sale for approval for sale or return basis. So before or at the time of supply or 6 months from the date of removal, whichever is earlier. So you will see two things here. At the time of supply, same regular rules will apply whatever for goods, or 6 months from the date of, let's say, 1st January these goods went out. Within 6 months the invoice has to be issued. So that is the time limit. This is for section 31. Section 31 clearly talks about the time limit for issuance of invoice, and that is relevant for this part. Clear? That is relevant for this part. So let's say this is A, let's say this is B. So A or B, earlier of the two. Clear? Okay. So the time of supply for goods will be, can you tell me, date of actual issue of invoice, invoice date or last date on which invoice should have actually been issued. 2 dates you will compare, earlier of the two, take it, then that will be your time of supply for goods. Next, so here section 31, I have just put this in a small way. These are the conditions. Then the supplier of taxable goods, let's say in excess of the amount indicated, let's say my tax invoice was only 1000 rupees. Now let's say I got 1500, extra 500. So for that 500, it is at the option of the supplier, be the date of issue of invoice in respect of such amount. So for that 500, whenever he will issue a new invoice, right? So the actual invoice is only for 1000 rupees. Let's say he is getting extra, maybe for transport or whatever, he is getting extra money. For that extra, whenever he actually issues the invoice for that extra 500, then it will be the time of supply for the extra amount in excess of the amount indicated. Clear? Okay. Now coming to what is this date of receipt of payment for time of supply of goods? So this I told you was already there in the law, but you don't need to look into this, right? Yes. So but you need to know what do you mean by the term date of receipt of payment. So you will see two things. Credit in the bank account. Let's say I am supposed to receive some money, you sold something to me, okay, and you will go to your bank account, I am supposed to pay you, right? You will look into your bank account, and then what is the day that your actual entry is happening, when is the amount being received in your bank statement. Next, date on which the payment is recorded in the books of accounts of the supplier. You will maintain a payments ledger, right? You will maintain a receipt ledger, you will maintain a receipt ledger. In that receipt ledger, maybe you would have recorded the receipt from Raksha on 1st January, but in your bank, because of a check or maybe some time lag, you actually received on 4th January, earlier of the two, 1st January, okay? Clear? Now, please make note of this. Under notification number 66 2017 dated 15/11/2017 has prescribed that time of supply will not be this date of receipt of payment will not be relevant for time of supply of goods. This is very important because in all your questions they are going to give you 3 dates: date of issue of invoice, last date on which invoice should have actually been issued, or they will either give you those 31 section conditions, and you will have to determine the last date of issue of invoice. Then third will be date of payment. So don't do earlier of all three and come for goods. Don't do that. You will be wrong. Please forget the date of payment. Just cancel it. Then you just see A or B, whichever is earlier. Fine. Am I clear? I am being very loud and clear that this will not be applicable. Date of receipt of payment you will not see for goods. So what do you mean by date of receipt of payment will not be applicable for goods? So if at all you understand that if there was an advance payment, let's say A, this is my A, I issued invoice on 1st Jan, B on 31st, let's say on 30th Jan, this was my last date for issue of invoice. But let's say I received an advance payment on 15th December. I received an advance payment. Let's say I total had to bill 1 lakh. Let's say 1 lakh I received in advance. So what was happening is, before even there was supply, it was getting taxed here. Earlier of three, earlier A, B, C, let's say, earlier of these three, it was getting taxed earlier for goods. So they say, even if you have received earlier, that is, this will be the earliest date, right? And this will be time of supply. So even if you have received any advance receipt for goods, when you supply goods, it will not be considered for your time of supply. But same condition if you receive for services. I gave you services, but before only I got some advance. Then on the date of receipt of advance, I will have to tax that and pay GST to the government. But for goods, this is not applicable. So clearly, this will not be the time of supply. Earlier of this and this will be this. Am I clear? Am I clear? Yes. Please pay attention to this point, because pakka you will get one question out of this. Either they will ask you to compute time of supply for goods or time of supply for services. Now, coming to reverse charge mechanism. What is reverse charge? I know I just explained to you. Okay. Now, reverse charge, how does it work? Supplier sells to customer. Now, customer is the one who receives, right? This is receipt of goods. Let's say this is 10th. Okay, this is receipt of goods. Let's say this is A. Then date of payment as entered in the books of accounts of the recipient, or date on which the payment is debited from the bank account of the recipient of goods. Now, he is the customer, right? He will pay, right? He will pay, correct? Yes. So, he will pay. So, when is he paying? You will see when he is actually entered in the books of accounts. Means, let's say in your payments ledger, he is recording this as 11th. But actually from his bank account, this got debited or this got deducted on 15th. Earlier of these two, consider this 11th. So, let's say this is 11th December. Okay. C. Third, date immediately which follows 30 days from the date of issue of invoice or any other document. Let's say the supplier issued invoice on 1st December. Okay. Now, plus 30 days you do. This will be the last date. So, 30 days if you do, here it will be 31st December. So, now you consider these three dates. Which is the earlier of these? This. Are we clear? Please. So, since this is a revision video, I cannot be repeating. I request you, I urge you, if you need more explanation, please kindly rewind the video and take a look at this once more and note down the dates as well, because if you have dates in your mind like this, it's going to get easier for your understanding. Okay. Now, they're telling us a reverse charge mechanism for goods will be applicable. Some certain goods have been notified by the government, which is cashew nut, which is not shelled or peeled, BD wrapper, that is tendu leaves, tobacco leaves, raw cotton, silk yarn, supply of floor tree. All this, the customer, whoever receives the goods, will be paying GST under reverse charge mechanism. Okay, so here we are done with section 12. Section 12, quickly look into the board please. We saw about FCM and RCM, and this was for goods, clear? And here we said payment date only not to be considered, that is date of receipt of payment. Be clear, date of receipt of payment will not be considered, but only date of issue of invoice, last day to issue invoice, these 2 days you will consider. Here you will see date of receipt of goods, date of receipt of goods, date of payment, because this is the customer side, right? Here you will consider payment, don't worry. Here he is the paying, there we are only saying date of receipt of payment. Can you see there's a difference? Whenever he receives, the supplier is receiving payment, that you should not consider. Here payment, when the customer actually makes payment, or in the books of accounts, whichever is earlier, and then 30 days from invoice date. Clear? Okay, so this is all we saw for forward charge mechanism for goods. Clear? Okay, come on now. Should we do services? Yes. Okay, I'm a chartered accountant. I filed a return for you. I'm going to charge you something. I'm giving you services. When do I tax this? Okay, forward charge, supplier, customer. Supplier will pay tax to the government, forward charge. In case the invoice has been issued on time, here also can we see invoice issued on time, section 31. So there are two cases. So for services, please kindly note there are two cases. Invoice issued on time. Invoice issued on time. Okay, yes, the invoice has been issued on time. Second, no, the invoice has not been issued on time. There are only two conditions. Has the invoice been issued within the prescribed time limit under section 31? Yes, good. Then one set of rules will apply. If the invoice has not been issued on time, then another set of rules will apply. So if the invoice has been issued on time, it will be date of invoice or date of receipt of payment, earlier of the two. Date of invoice or date of receipt. Date of invoice is when I issue the invoice. Date of receipt of payment is when I receive the payment. Earlier of these two dates. Let's say on 1st I gave you the invoice, but you had already made payment to me on 15th November. 15 days before I raised the invoice only you made payment to me. You made advance payment. Earlier of these two dates will be this. Am I clear? Yes. But now let's say the invoice has not been issued on time. So before we go there, can we see what is the time limit for issuance of invoice? So I provided services, I filed your return, everything is done. Now within 30 days of date of provision of services. Now let's say on 1st January I gave you service. Within 30 days, within 31st Jan, let's say I should have raised my invoice. So if my invoice is dated, let's say 15th January, then it is well within 30 days. But if at all I say I didn't raise the invoice within a time limit, I raised it on 20th February next month, then I fall under this second category where invoice has not been issued on time. So we will come to the other cases later. For now, so much is enough. Second, now date of provision of service. Date of provision of service. When do I actually give the service? Or date of receipt of payment. So can you see this is going to remain the same for both. This will be the same. Here it will be I, here it will be POS, point of provision of service. Clear? Yes? All right. So next case is when invoice has not been issued, date of provision of service or date of receipt of payment. Now date of receipt of payment would be earlier of the two. I already told you, date of credit in the bank account or date on which you actually record this receipt in your books of accounts, in your receipt journal or in your journal or in your ledger, wherever you record. Earlier of the two dates will be considered for date of receipt of payment. So under this, please note, you will have to see for two cases. One is books of accounts that you do, one is your bank statement. Clear? Earlier of the two. Are we clear? For date of receipt of payment, you will have to see these two. You can note all this down. So in my fast track series also, I keep making these board notes and I ask you to note this down, because one day before exams all this is going to come handy. You cannot sit and read the entire provision and read line to line. You will not have enough time at all. All you can do is just brush, look into what is there, move the page. You have 1000-page textbook for your tax laws. So if you think that you can read every line quickly, it is not possible, my dear friend. You can only brush, revise. So if at all you feel like you need a little more help, then, and if you need a little more help beyond these revision videos, and if you feel like you need to gain that good conceptual understanding, you've been failing in your exams lately, or if you feel like your preparation is not just enough, then you can also check our fast track series for indirect taxes, which will help you cover the entire syllabus in less than 25-30 hours, and which will be much in detailed, concept oriented, real life examples, and a lot of board charts, full understanding, and that way you will be strong on the subject, and there is no way that you will not do well in this paper. Fine? Yes? Okay. So this is it. Now, section 31, we saw these two dates. Date of provision, I gave the service, within 30 days I have to receive. Okay. Next, in case of insurance, banking, etc., all this, NBFC, telecom, all this, issued at the time of recording such supply in the books of accounts or expiry of the quarter which the supply was made. Let's say this is January, February, March. This is the quarter, right? Then next 3 months. Let's say services was given somewhere here. So when should you raise the invoice? Within 31st March. Clear? Or whenever they are recording in their books of accounts, whenever they want it, earlier of the two. Next, if it is a continuous supply of service, let's say I have a contract, I will tell every month I will do this. At the end of 6 months, you pay me. It is a continuous contract, right? Here, if the due date, see there, invoice must be issued before the due date of payment. That is, let's say there is a contract and it says the due date of payment is on, let's say, next 3 months. Now it is January, let's say, within March you should make payment. So if the due date is already specified, then within that due date you should raise the invoice. But if the due date is not specified or it is not ascertainable, on the completion of certain milestone event, let's say you are building a office space. Now when you get a completion certificate, or when you get like some certification from the authority, let's say some milestone event, on that event also you can raise or raise an invoice. Clear? Okay. Now coming to RCM for services. So first it will be date of invoice plus 60 days. Now I told you this is supplier, this is customer. Customer will pay GST. This is RCM. Customer will make payment to the supplier, but the tax he will make payment to the government. Clear? So first condition is 60 days from date of invoice. Second is date of payment. So these, earlier of these two will be the time of supply for services. Okay. Next. Okay. Now transaction between associated enterprise where the supplier of service is located outside India. Now we both are group companies, company A, company B, same person owns this. Okay, or maybe let's say one company holds more than 26% voting power or shareholding in the other company. They both will be associated enterprise. So if at all they have a common link like this, and if they satisfy the definitions of associated enterprise, and let's say one company is in India, the other company is in Australia. So this is the India associated, India AE. This is the Australia AE. Now the supplier is located outside India. This is giving services to the India AE. Then what is the time of supply? So this is a very different provision, so you need to pay attention. They might ask you the date of recording the supply in the books of the recipient. When he records books here, when he records the service, this is recipient. Or date of payment, he will make payment. No, he is receiving, so he will make payment. Whoever receives the service will make payment. When he records such service in his books, saying I received the service, the recipient when he records, or the recipient when he pays. Two conditions, either earlier of the two. Clear? Okay. Coming to vouchers. What is a voucher? Let's say I have a West Side voucher. Okay. So this voucher is worth 5,000 rupees. I can go and buy anything I want. I can buy cosmetics, I might buy shoes, I might buy clothes, I might buy anything I want. Okay. This is a voucher, right? So how will you tax this? Let's say this will have a validity of 3-4 months. If you sell something through a voucher, how are you going to tax it? So if the supply is identifiable and the supply is not identifiable, let's say I have watch store voucher. Okay, I have a voucher worth 5,000, and let's say I have from a Titan watch store. So the supply is identifiable. In a watch store, what will you buy? Watch only. It is identifiable. But let's say I have a voucher of Shoppers Stop. I might buy anything I want. I don't know. I don't know whether it's shoes or you cannot identify the supply clearly. Let's say, for example. So there are two conditions. One is either supply is identifiable. Second is either supply is not identifiable. If the supply is identifiable, then at the point of issue, whenever you are issuing the voucher itself, you will have to tax that. But if the supply is not identifiable, the date of redemption, when the person actually goes, redeems the voucher and uses that voucher, that will be the date of time of supply. Cool. Now, in all other cases, what is this? This is a, all other cases means this is a residual provision. If it does not fall under the above categories, FCM, RCM, voucher, associated enterprise, for any, if it is not falling, then what will you see? You will see date of filing periodic return. That is your GSTR 3B that you file, the date when you file that, or the date on which you actually make payment of GST. Earlier of these two dates you will take. This is called the residual provision. Next, date, time of supply for recovery of interest, late fee, etc. Let's say I billed you 1,000 rupees. Now, you didn't pay me for 6 months. So I will tell you, boss, you're very late. You have to give me penalty interest charge, due date late fees for another 1,000 rupees. So I will collect 1,000 rupees. You think the government will leave you without taxing that 1,000? Yeah. So for that extra late fee, interest, penalty, whatever you charge extra, for that, what is the time of supply? For that, the date on which the supplier receives such addition in value, whenever the supplier actually receives that 1,000 rupees or extra, that will be the time of supply for that additional charges. Next, time of supply in case of change in rate of tax. Please be very careful about this. I am going to repeat this. I am going to be doing this with the help of an example. In the case, let's say, guys, so this is my change here, change in rate of tax, okay, this is my change in rate of tax. So let's say earlier it was 12%, later it became 5%, and this is, let's say, 1st January 2024, okay, this is my change of rate of tax. So until this date it was 12%, but after this date, through notification, they made it 5%. Then what is it going to be? Where here, if now we are talking about the left condition, before, we are talking about the before condition now, before change in rate, where the invoice for the same has been issued and the payment is also received after change in rate. Here, can you see here, in this only, invoice is also here, payment is also here, then nothing is falling before. Then earlier of these two dates will be the time of supply, right? This is after, invoice has been issued after the change in rate of tax, payment also has been received after the change in rate of tax. Then these two you see, let's say this is 1st February, now let's say, and this is 5th February. Earlier of these two, this will be the time of supply. Where now in the other case, where the invoice has been issued prior to change in here, let's say the date of invoice is this, but the payment is received after change, this is date of payment, okay. Then earlier of these two is what? Time, the time of supply should be the date of issue of invoice. Which is the earlier of these two? Date of issue of invoice, right? Yes. Next, where the payment has been received, now in this case, second, this is date of payment before the change in rate of tax, but the invoice for the same has been received after the change of rate in tax. Which is earlier of these two, guys? Payment, right? Yes. Then your time of supply will be date of payment. Clear? Yes. Okay. Now, second condition, in case the goods or service or both have been supplied after the change in rate of tax. Now this is your change in rate of tax. This is your supply. Your supply is being done here. In my first case, the supply was before the change in rate of tax. Now in this case, this is after the change in rate of tax. Where the payment is received. Now this is payment date. But the invoice has been received. This is my invoice date. The time of supply shall be the date of receipt of payment. So what you should see, where is the invoice, where is the supply? The supply is here, right? Correct. So if the supply is before, everything will be before, earlier of the two. If the supply is after the change in rate of tax, then whatever is the later, whatever it falls in the time of supply, that will be, see, supply is falling here, which is earlier of these two, invoice, but the time of supply is not invoice date now. The time of supply is the payment, because the supply is here. Wherever there is supply, that portion will be the time of supply. Fine. Next, where the invoice has been, now where the invoice has been issued and payment is received, now this is change. Invoice is also this, payment is also this. The time of supply shall be the date of receipt of payment. Now see, I told you, or the date of issue of invoice, whichever is earlier, but the supply is here. Nothing is falling in this category, right? Everything is falling under the before category. Then you see earlier of these two, this. Next, the invoice has been issued after change in rate of tax. This is invoice date. But payment has been received. This is payment date. But the time of supply will be the date of issue of invoice. The supply is here, right? So wherever there is supply, that will be the general time of supply for goods. Now, provided that the date of receipt of payment shall be the date of credit in the bank if such credit in the bank is after 4 working days from the change in rate of tax. So in this case, the same date of payment you will consider what? From date of, let's say this is 1st Jan, change in rate of tax. 4 working days you take, 4 Jan. Now, provided that the date of receipt of payment shall be the date of credit in the bank account. If such credit in the bank account is after 4 working days from the change in rate of tax, means what? This date of payment has to be within this 4 working days of the change in rate of tax, if at all the date of payment is falling here. Fine. Okay. So 1st January plus 4 days, there is a buffer for 4 days. If at all, 4 days, why? Because if at all you give any check, credit or anything, then you know it will take time to process. So they're saying you have a buffer. Okay. All right. So moving to the next important, very important part, that is your value of taxable supply. So what do you do in value of taxable supply? What is there? So see, GST is equal to rate of tax into value of supply. I told you there will be many rates. Let's say this is 5% rate. On what are you going to charge 5%? On what amount are you going to charge GST? That is the value of supply. Simple. You are going to charge rate, but on what amount? That is your value of supply. So we have moved to the next part B of the chapter, that is value of supply. You can just take a break and look into this. Take a quick water break, come back in 1 minute. Okay, so this value of supply is generally the transaction value. What is the transaction value? Now, I gave you some services. You paid me 1 lakh rupees. That is the transaction value. Price actually paid or payable. 1. Second, where supplier and recipient are not related. Means if at all you are my sister, will I charge 1 lakh from you? I will say maybe just 10,000 is enough just to cover my cost. It's fine. I'm not going to charge. So do you think the GST department is going to just collect GST on 10,000 instead of collecting on 1 lakh rupees? It's a loss to the government. They're not going to do that. Fine. So it should be with unrelated parties. The price is the sole consideration. Means what? Beyond that 1 lakh rupees, I should not be getting anything else. If he says, I will give you 1 lakh in cash, then I will gift you a car. So what is the actual transaction value? Let's say 10 lakhs is the value of the car plus 1 lakh. Actual transaction value is 11 lakhs. Correct? So transaction value is the price actually paid or payable between unrelated parties, and price should be the sole consideration. Inclusions in the determination of value of supply. So any taxes, duties, cess, fees, charges, any charge, tax, fees apart from GST. Now let's say I'm collecting, let's say 10,000 rent. Okay, I'm also including 1,500 as municipal taxes. 11,500 will be my transaction value for GST. And if this is a tax, this is tax other than GST. Please be mindful. They will give you GST amount also in the question, and they'll ask you to compute transaction value. Please do not add GST amount. On this value, let's say you will charge 12%. This will be your GST amount. Clear? Okay. That is, now any amount that the supplier is liable to pay in relation to such supply, but which has been incurred by the recipient. Now let's say this municipal tax the supplier are actually supposed to pay, or let's say there was something that was the supplier's liability, but the recipient already paid it on behalf of the supplier. So does that mean it should not get added to the value? No. So even if the recipient incurs it on behalf of the supplier, that let's say transportation charges, 1 lakh worth goods are sold, transportation charges of 2k, recipient pays directly, but actual transaction value will be 1,02,000. Cool. Incidental expenses, all this packing, charging, commission, etc., etc., whatever is directly related to that supply, incidental charges will be added. Interest, late fee, penalty for delayed payment. If at all I'm supposed to pay this, I paid late, so I'm paying 5k interest because I paid late. This will also form part of my supply. Subsidies directly linked to the price, means now if there's any subsidies directly linked to the price, excluding subsidies provided by central government, state government. If the subsidy has been provided by central government, state government, then it will not be added, But if it is a local, let's say a private company gave some subsidy, or there's somebody who gave you subsidy, then it will be added to the value of supply. Exclusions for the determination of value of supply. So first we saw actual, what all will you include in transaction value. One is price paid, then you saw taxes, fees, then you saw incidental charges, correct? Then you saw interest, late fee, etc., etc. So all this if you add, you will get transaction value. Now what will you deduct, means, or what will you not include in that transaction value? If at all tomorrow you go purchase a laptop is worth 50,000, you get a discount and he is selling it to you for 40,000. What is the transaction value? 10,000 rupees is the discount, right? So they're saying 40,000 will be the discounted value, will be the transaction value if the discount has been agreed to at the time of supply. Means I went to the Chroma showroom, he said upfront discount I'm giving, I will give you a discount in the invoice. So 50,000 he will bill, 50,000 minus 10,000 discount, he will say 40,000. On this, let's say he's charging 12%. Now let's say whatever 50, or this will be my total sales value, correct? This will be before or at the time of supply. Discount is under two conditions. This is my discount. If it is agreed at the time of supply, okay, discount is agreed at the time, or discount is agreed after the time of supply. See, after the time of supply is affected. So let's say I brought the laptop also house, I brought everything. Let's say I gave 50,000, brought the laptop, everything. Now all of a sudden the company announced some discount. So can I reduce this 10,000 from my GST transaction value? So they're saying you can do it if the discount was already known and agreed at the time of supply. So if at all that showroom fellow says, sir, you take it for 50,000, after 1 week we'll be having some New Year sale, it's agreed, after 1 week we will be giving discount for sure, it's established, we have it in our company policy, agreed, it was agreed. Now, so this was established, agreed, the discount was already agreed at the time of supply, and the ITC, whatever that input tax credit on that 10,000, if it is directly attributable and which has been reversed by the recipient of supply. So in my example, on this 10,000, let's say 12%, this is 40,000 plus 10,000. This is the discount I'm getting, right? So 1,200, this is the input tax credit, means this is the tax that I paid when I purchased, right? I should reverse this, because I'm getting a discount. No, actual price is only this. I'm capable of taking input tax credit only on this 40,000, not on this 10,000 extra. So two conditions: discount should be agreed at the time of supply. Second, the discount should be capable of being reversed. It should be linked directly to the invoice. So this is the two things that you need to be mindful of. All right. Continuing our next topic in the chapter, valuation rules. How do you value the value of supply, correct? The whole discussion that we had, how do you arrive at a correct value? Certain rules have been given and you have to follow that. So first, value of supply of goods or services where the consideration is not wholly in money. See, if let's say I purchase some furniture, I pay 10,000 rupees to you. So that 10,000 rupees will be the value of supply. That is, the transaction value will be the exact value of supply. No problem. But let's say that 10,000 worth furniture, I say I'll give you only 4,000 rupees. Another 6,000 rupees, I will adjust it against something else later. So the transaction value, that is whatever 4,000 that I paid, is not the true value. The actual transaction value is 10,000 rupees, right? So how do you determine cases where the consideration is not wholly in money? So first you see the open market value. So if at all in the fair market, if at all you go and want to purchase a furniture of the similar kind and quality and everything, how much would it be available in the market? So that is called the open market value. So if the open market value is 10,000 rupees, then the transaction value also will be 10,000 rupees. First. Second, sum total of consideration in money and any such further amount in money as is equivalent to consideration not in money. So 4,000 rupees you received in cash, another 6,000 rupees, let's say, I say I will give you one watch worth 6,000 rupees. So I'm able to quantify that money, right? So 4 plus 6, that total, you have to add both. Whatever you receive in money and whatever you don't receive in money, quantified in money terms, that will be 10,000. Fine. Okay. Be the value of supply of both or both of like kind and quality. I told you, you will see a furniture of the similar kind, similar characteristics, similar quality and everything having the same characteristic. What is it available in the market? You will see the like kind and quality, and you will also determine for your same product if it is matching the other product which has the same like kind and quality. Next. Now, if all of this is not possible, then you will go to rule 30 and rule 31. Rule 30, what does it say? Rule 30 says you take cost of production. Okay, cost of production or manufacture or whatever is your cost. Or you take cost of services if this is a case of service. Then you do 110% of this. In simple words, they are asking you to add a margin of 10% over and above your cost. So, you let's say your cost, let's say, is around 9,000 rupees. Then you add 10%, that will be 9,900. 9,900 will be your transaction value, that is rule 30. Rule 31 is called residual value. Whatever is available, you take that, they say. We'll look into that a little later. Okay. Next, coming to value of supply in case of goods or services in relation to distinct person or related persons. So, me and you are brother, sister. We are siblings. We are related persons. Let's say we both are shareholders of one company, then we both are related persons. Then if it is a distinct person, let's say there's only one PAN. In my name, I have a business in Chennai and in Bangalore. These two are in two different states. That's why you'll have to obtain GST, two different GSTs, because GST is state specific. Then my Bangalore business and my Chennai business, both will be distinct person. If at all I sell something from Bangalore to Chennai, it will be a transaction or a sale between distinct persons. And related persons, we've seen the definition, everything that falls under the definition of related persons. In simple words, this is the revision. So let's just stop it here. So related persons, any transaction between related persons. See, why is this rule brought about? Because I'm easily able to influence the decision. If you are my brother, I will give you that same product for a way lesser amount, right? I will not charge the entire transaction, but the state will not suffer revenue because you are transacting at a lower value. Hence, they are telling, if at all there is a sale between distinct or related persons, one you'll see open market value. See, these two things are the same, open market value and like kind and quality. If both of them you're not able to find out or ascertain, then you will see rule 30 and rule 31. Rule 30 says cost of production into 110%. Rule 31 says residual method, whatever is available, you do that, it will say. Next. Okay, now this received or made or through an agent. Let's say I'm a seller, you are my agent, I'm telling you, agent, please go to Delhi and sell these goods on my behalf. So if at all I'm selling through an agent, there is some middleman in the party, then what will happen? See, here also again, be the open market value of such goods. So here guys, please listen to this carefully. One is open market value of the goods being supplied, or see, for agent there is an option. Okay, this one is open market value. Can you see this? Or can you see 90% of the price charged of the supply of goods of like kind and quality by the recipient to his customer, not being a related person. So what do they mean here? So I am the principal. Okay, I am selling through my agent, correct? Agent is selling to the customer, right? This is the transaction. Clear? Now this is the customer. Let's say he is also a trader. He is going to sell these goods. He is going to sell this to his customer. This is customer number 2. Now, when I am selling these goods through the agent, let's say he is selling this at 10,000 rupees. You take this value into 90% you do. This is 9,000. So, my value of supply can be this. Clear? Whatever is selling to his customer. This customer selling to his customer, you take 90%, and these people should not be related. That is, all these people should be unrelated parties. Clear? Yes, as simple as it can get. So you have two options. Either you take this 90% of amount charged by the customer to his customer 2, let's say. Okay. If all of that is not able to, if you're not able to determine under clause A, then you take clause B, which is rule 30 or 31, whichever you want to take, you take it. Cool? Okay. Now, rule 30 talks about cost, which I told you. You just take the cost of acquisition or cost of production, cost of manufacture, cost of services, anything, you do 110%, and then that will be the value of supply. Rule 31 says, this is a residual method. If nothing is applicable, use reasonable means. Means please use your best judgment. Please use your common sense. Based on your common sense and reasonable judgment, whatever you are able to ascertain the value of supply, ascertain that. Cool. Okay. Now coming to this, now these will be special cases. Whatever we saw earlier was all general cases. That is, consideration not wholly in money, transaction between related persons or distinct persons, transaction between agent. Now we are saying lottery betting gambling. Then you see foreign exchange, and whenever you convert foreign exchange, what will be the value of supply. So coming to the special cases, that is lottery betting gambling. Please understand that all these are special cases, so you might get one question each, and all of this has to be read independently. And I urge you to be clear on these topics also. The earlier topics is simple. You have only 3 cases: consideration not wholly in money, principal and agent, one more is related person, distinct persons. All these 3 are very important. Please make note. So next, value of supply in case of lottery betting gambling. So they're saying, let's say your lottery ticket is 100 rupees. What will be the value of supply? You do 100 divided by 128. This figure, what you get, this will be your value of supply. That's all. Now, value of supply of actionable claim in the form of chance to win in betting, gambling, or horse racing in a race club. Can you see? If at all it involves any race club, then it will be 100% of the face value. Whatever bet amount you put, let's say you put a bet amount of 1 lakh. So that full 1 lakh will be the value of supply. Whatever you pay to the totalizer. Okay. Next, rule 32. In respect of certain supplies, again I told you this is now in certain supplies, here one is this involves rupee, this involves only foreign exchange. First, for whenever you're converting currencies, for a currency when exchanged from or to Indian rupees, the value shall be equal to difference in buying or selling rate. Let's say I'm converting USD to INR. Okay, so let's say USD to INR. Fine, this is the transaction here. If this is the case, so wherever rupee is involved, remember R for rupee, R for RBI. You will take the exchange rate, whatever this RBI, it's called a RBI reference rate, you take that into difference in the buying or selling rate, whatever is the difference between the buying and selling rate, you take that into RBI reference rate. See, let's say your buying and selling rate, the difference will be this. let's say it is 82 rupees. Now RBI's reference rate is 83 rupees. Okay, let's do this. So you take 1, let's say you converted 100 units, 100. So this will be the value of supply. Clear? Yes. How many number of units did you convert into? Difference between the RBI reference rate and the actual buying rate or actual selling rate. Clear? Fine. Okay. So let's say RBI reference rate is 83. Let's say the TT buying rate for today's rate. Let's say for example TT buying rate for today's rate is 83. But the actual value what you did is 82. Into 100 you do 1 rupees margin into 100 units, 100 rupees is your value of supply. Now come here. Now let's say you converted dollars into pound. There is no Indian rupees here at all. Correct? There is no involvement of Indian rupees here at all. Then what do you do? Here, in relation to supply of foreign currency, including money changing, shall be deemed to be up to. So they have given you certain slabs. Please understand the slabs. You will need to remember this. If at all it's coming up to 1 lakh rupees, then the slabs that I'm telling you, the amount of money that you're converting, if it's coming up to 1 lakh, then you'll take 1% of the gross amount, how much ever you're converting. Let's say 90,000. 90,000 into 1% will take into 1% or rupees 250, whichever is higher. So this will be 900 or 250, whichever is higher, you'll take this. Clear? Okay. So you have slabs of up to 1 lakh, 1 lakh to 10 lakhs and then above 10 lakhs. So here you will just see the slabs. Please remember 1% will be 1000 rupees or 250, whichever is higher. Here again on this slab you would have paid 1000, right? So again it will be 1000. 1% of 1 lakh 1000 plus 0.5% of the amount that's over and above 1 lakh. Let's say 5 lakh rupees. Up to 1 lakh it is 1000. For the rest of the 4 lakhs you will pay 0.5%. Clear? Okay. Now again you see the slab. You know to do this income tax slab rates, like it's the same thing. You just need to remember this. Again for this entire thing up to 10 lakhs here, whatever they're doing, it is 5,500. Over and above 1 lakh, 10 lakhs. So up till 10 lakhs you take 5,500. Let's say your transaction value is 11 lakhs. On an extra 1 lakh, you take 0.1% of the gross amount exchange or 60,000, whichever is lower. Fine. So I need you to remember these. If at all you get a question, it will be a simple thing for you to calculate on paper and get to the answer. Next, if at all there is value supply or services in relation to booking of air tickets. If it is domestic travel, it will be 5%. 5% of the value of the air tickets. Then basic fare of domestic bookings, 10% in case of international bookings. Special case. Okay. Next, coming to insurance business. What is insurance business? How much, whatever premium that you pay. Let's say I'm purchasing something from LIC, example. Now the premium that I pay, on that I have to pay GST. Okay. They're telling how will you calculate that. 1. Gross premium charged from a policy holder reduced by the amount allocated by the investment. Let's say 25,000 is the gross that the policy holder is paying. On this, 20,000 is going to the investment. Only so much amount is getting investment. This 5,000 is actually the commission. Okay. So they're saying this difference, whatever is going to the investment, remove it because this is getting invested. Okay, this is going for investments. The remaining 5,000 is commission. This will be the value of supply. Okay, next, coming to another case. If it is a single premium annuity, let's say I'm paying an annuity of 10 lakh rupees for the next 20 years. After 20 years, I will get that money back. Single premium. I'm not paying regularly. At once I'm paying single premium. Then 10% of the single premium charge, 10 lakh rupees into 10% is how much? 1 lakh. So 1 lakh will be the value of supply. Okay. In all other cases, if it does not fall under A, the earlier first two cases, then it will be for the first year of your insurance, it will be 25% of the premium charge, and from second year onwards, it will be 12.5%. Clear? Whatever premium, you know what is premium that you pay to the LIC, right? So that 25% in the first year on the premium charge, 12.5% on the rest of the years. Now, if at all you are involved in buying and selling second-hand goods. Let's say I'm a car dealer. I purchase second-hand goods. I modify it a little. I brush up, clean up. So speaking about second-hand goods, let's say I'm a car dealer. I purchase old cars. I refurbish them and then I sell them. So what will be the value of supply? Let's say I purchase this car from this customer or whoever is selling the car at 4 lakh rupees. I refurbished, I replaced some parts and did all of that, and I'm going to sell this car at 5 lakh rupees. So difference between the selling price and the buying price is 1 lakh rupees. 1 lakh will be the value of supply. But in cases where the value of supply is negative, where the difference is negative, let's say I purchased this at 4 lakh but I'm selling it at 3 lakh 50. So I'm selling it less than the buying price, right? So that 50,000 will not be considered. If the value of supply is negative, then you can ignore the transaction and you don't have to check for any value of supply. So, okay. Next, in case of any token voucher, anything whatever is redeemable, whatever is the redeemable price, at what value you redeem it, that will be the value of supply. Next, where the value of taxable services provided by class of service providers as may be notified by the government, as referred to in para 2 schedule 1 between distinct persons as referred to in section 25, where input tax credit is available shall be deemed to be nil. So if at all this is a supply under schedule 1 and this is a supply between distinct or related persons, and if the input tax credit is available, then the value of supply will be considered to be nil. Next, wherever there is a pure agent services, what is a pure agent? I am like the middleman. So this is the seller, I am the pure agent, this is the customer. So what I do, I offer all the ancillary or middleman activities to the seller. So I say, you just sell the goods to this party, I will arrange for transportation, I will arrange for warehousing, storage, all of that I will do. I am giving pure services to this seller, correct? So let's say the seller is charging the customer 1 lakh rupees. But this pure agent is charging the seller around 10,000 rupees for transportation, warehousing, storage, etc. etc. So whatever this pure agent charges the seller, that 10,000 rupees will be the value of supply in case of pure agent services. The sale between the seller and the customer is independent. The pure agent is giving certain services in an independent capacity. This is not included in the supply of goods whatever the seller and customer are purchasing. So this 10,000 rupees will be the value of supply. Okay, so he is providing services on his own account. Okay, now rate of exchange of currency other than Indian rupees for determination of value of supply. So here you will take, for goods you will take the, if at all this is other than Indian rupees, then you will consider the CBIC rate for goods. For services you will consider Indian GAAP rates. Simple. Okay. Now, value of supply in case of inclusive. What is inclusive supply? Let's say 1,000 rupees I am selling. So generally this will be the taxable value, 18% GST. You will charge total 180 rupees. Total will be 1,180, right? But in this case you're saying inclusive value means, this means what? In this 1,000 only, tax is also included. So to take out the tax amount, you will take, this is for 118 total, 100 plus 18%. 18% tax, how much is the tax? Got it? So this you will do inclusive value. For MCQ, they will give you, if at all, the rate of tax is 5%. So how do you do this? So the actual value of supply, this is the actual supply, and if the rate of tax is 5%, let's say, so 100 rupees plus 5%, 105. So 5 is the numerator, is what you want to get, right? If at all, please understand what they are asking you. Are they asking you what is the GST amount? If they are asking you what is the GST amount, you do 5 here, correct? Because 5% is the rate of tax. 5 divided by 105 into 1000. But let's say they are asking you what is the taxable value. Taxable value will always be 100, right? So here 100. So this will be the calculation that you will need to do for the MCQs if at all such a question comes. Cool. Okay. Now, coming to place of supply. Now, simple. Let's quickly just revise place of supply. So, where the place of supply can be determined? If it involves movement of goods from Karnataka to Tamil Nadu, movement is there. Okay. Location at which the movement terminates for delivery. Means what? This is getting delivered in Tamil Nadu, so Tamil Nadu will be the place of supply. Movement, where there is no movement of goods, I go to Chroma showroom, I purchase the goods. Place of delivery, he is giving me the delivery of my laptop in that Chroma showroom, Bangalore only, right? So Bangalore will be the place of supply here. Now where the goods are delivered by the supplier, now please consider, so this is supplier, this is a receiver of goods, now this is the purchaser. Okay, so what this fellow says, let's say this receiver is in Delhi, he is in Mumbai. Okay, he is also in Mumbai. Okay, now this purchaser who is in Mumbai has to deliver these goods to Delhi to this another person, that is a third party. So what they're saying, this is the first party, this is the second party, this is the third party, and he is the registered person. Okay, so the transaction is actually between these two people. This registered person who is the purchaser is actually saying, seller, you do one thing, instead of delivering the goods to Mumbai, deliver the goods directly to Delhi to another person. Okay, so they're saying first party, second party is the receiver, one who actually receives the goods. This is the actual purchaser of the goods, and he will be the third party. So in this case, what happens, on the instruction of the third party, the seller is sending the goods to another party, correct? Simple. So the actual transaction is between these two people. So the place of supply will be not the place of delivery, not this but this. Clear? Simple terms I'm telling you. So place of supply shall be the principal place of business of the third party. This. Next, where the supply does not involve movement, I told you wherever there is delivery, that will be the place. Goods are assembled, installed. Let's say some goods are getting assembled or installed. Wherever you assemble, install, that place of assembly of installation will be the place of supply. On board a conveyance, including a vessel, aircraft, where the taker, let's say you are sending some goods through a conveyance. So on board a conveyance, at which place are you boarding those goods into the vessel, aircraft or anything? That place, let's say journey is from Mysore to Chennai, you're sending the goods through a conveyance. Which place are you onboarding the goods? In Mysore, so Mysore will be the place of supply. Okay. Next, if the place of supply cannot be determined, then whatever, you just check the prescribed manner and determine the place of supply. Place of supply in case of import into or export. So if you import, what is it? Goods are coming in, right? Generally the place of supply will be recipient only, the place of recipient of services. So one who imports the goods, this will be the place of supply. In another case, if you are exporting the goods, this will be the outside, the place outside the territory where the goods are exported outside India, that will be the place of supply. In simple, understand, who receives the goods? GST is a destination based tax, consumption based tax. Who receives the goods? That will be the place of supply. Okay. Now coming to place of supply of services. So far we spoke about goods also. Now just in case of place of supply of services, where the situation covers a situation where location and location of recipient both are in India. So they're telling this is a within India transaction, it's a domestic transaction. Here, first, general principle for all services and for everything, generally, normally the place of supply will be the location of the recipient. Who receives the goods, who receives the services, that will be the place of supply. Okay. Now, if the recipient is unregistered, I am selling to you, you are unregistered, then where the address of the recipient exists on records, let's say your address is available, Aadhaar is there, whatever is available, then your place of supply, your address will be considered to be the place of supply. Now, if at all the address is not existent, I sold to XYZ, I don't know who he is, I have no idea, I have no address, nothing, then the supplier's address itself will become the place of supply. Okay, simple in case of unregistered person. Services relating to in relation to immovable property. Now, if the location of the immovable property or boat or vessel is located or intended to be located outside India, you are giving certain service, that building, let's say, is outside India, then who is giving the service? Me. So the place of supply shall be the location of the recipient. So here, who is actually receiving the service? The one who receives the service, that will be the place of supply. In almost 90% of the cases, the place of supply will be the location of the recipient, one who receives. Okay, next. Now, you're giving some services directly in relation to the immovable property, like architect services, construction services, surveyor, engineer, grant of right, immovable property, construction work, whatever. So, you're helping to construct the building. Then, and if the immovable property is located in more than one state, let's say you are doing this construction activity in more than one state, in three states, same project, 3 states you're doing, then you apportion it, how much ever work you've done, proportionate basis will be taxable. Okay, this is for proportionate basis. Next, in case of lodging, accommodation, etc., etc., now you're giving some lodging accommodation services. Where is that immovable property located? That will be the place of supply. Again, accommodation, again, if at all you're doing a wedding, reception, hall, something like that, if you're taking, that also, where is that immovable property located? That will be the place of supply. Okay. Now, again, beauty treatment, fitness, restaurant, catering, you go to a restaurant. That restaurant is in Bangalore. So, where is the place of supply? Wherever the restaurant services are being offered, right? So, that every time you go to a restaurant, will you ask what is your address? You are the recipient. If you are from Delhi, I will tax it to Delhi. No, right? So, in simple, anything related to immovable property or place of actual performance of service, that will be the place of supply. So, here it comes to restaurant, catering, personal grooming, health service, cosmetic, plastic surgery, wherever that activity has been performed, that will be the place of supply, place of performance of service. Next, training, appraisal, etc., etc. Registered person, again, who is receiving the training? Registered person, that will be the place of supply. If it is unregistered person, location of actual performance, where is the training being given? That location will be the place of supply. Okay. So, this will come when you keep reading the sections, because certain specific things are there, you need to keep reading and be clear. You cannot write location of recipient for everything and come, and generally place of supply is generally easy. You just need a little practice so that you memorize and understand what goes for what. Then let's say there's a stage show going, there's a dance performance. Where is the dance performance happening? That will be the location, that will be the place of supply. Okay, admission, cultural, artistic, amusement park, Wonderla you go, if at all you go to Wonderla. Where is Wonderla located? Bangalore. Bangalore is in Karnataka. Karnataka will be the place of supply. Okay, now let's say there is any exhibition, fair, celebration. Place of supply will be location of such person. If location is not available, where is the exhibition actually held? That will be the place of supply. Okay, fine. Now, transport of goods including courier, mail. I am sending something through courier. Location of recipient, where are you located? That will be the place of supply. If location of recipient is not available, then wherever the goods are handed over for transportation, let's say this is going from Mysore to Bangalore, Mysore will be the place of supply. Next, transportation of passengers, location of the recipient. So, I am booking a ticket. What is my location? That will be the place of supply. Generally, as I told you, 90%, more than 90% of the cases, all your place of supply will be location of recipient. Only if it is in case of immovable property or actual performance of service, then it will be the actual immovable property or performance of service place. Okay. Now, if at all you don't know location of recipient, address, etc., etc., place of embarkation. First point, embarkation is the point you get into the transport. That is the place of embarkation. Okay. Now, all other cases, address of the recipient as per records available. All cases, what is the recipient's address? Take that address. If you don't have the recipient's address, take the supplier's address. Simple. Okay. Now, bank, you go to bank, you get some services from bank, banking, financial service, etc., etc. Location of the recipient, address exists on records. If there is no address existing on record, then the supplier's place itself will be the place of supply. Insurance service, generally location of recipient. Otherwise, location of recipient as exists on the records. Now, advertisement you're giving to whom? To any government body. Then, and if at all this is given to, like, let's say 3 different states in 3 different places, you will do proportionate basis. Okay, each of the respective states you will do whatever is agreed in the agreement, as per the agreement. Okay, next, Now, in this case, we are done with section 12, where both the location of the recipient and the supplier both are in India. In this case, we are going to see where either supplier or recipient is either outside India. So, this will qualify as import or export, correct? So, either one of the two parties is outside India. Then, general scenario, generally I told you, when you import, who is the receiver? The importer is the receiver. So, the place of supply will be the place of the recipient, that is the importers. India will be the place of supply. When you export, this is going outside the country. Who is receiving? The foreign country is receiving. Foreign country will be the place of supply, correct? Okay. Location of recipient. Now, if it involves actual performance of service, let's say, I told you, some particular service you're giving, then where are you performing that service? That will be the place of supply. Okay. Now, services in relation to immovable property. Now, I told you, let's say there is some guest house, club, immovable property, construction work, architect, interior decorator, etc., etc., etc. Same case, whatever we saw in the earlier part, same. Location of the immovable property. Where is the immovable property located? Let's say this property is located in Australia. You are giving some architect services from India. So, from India, who's a recipient? Australia. Where is that immovable property located? That is in Australia. Australia will be the place of supply. Simple. Okay. Next, admission organization. See, all these are the same what we saw earlier, but here one of the parties is outside India. So, this will qualify as import or export. But all the cases are the same, where the event is actually held. If at all you are holding any event, where is the event being held? That will be the place of supply. Okay. Next, if at all there is any multiple locations, same, you give certain services, but there are multiple locations, then location is in the taxable territory. Next, again, multiple locations involving more than one state, then you see what is the contract. Depending on the contract, you take the value of supply. Next, banking company, financial institution, etc., intermediary, etc., etc., etc. For all this, now to account holders, let's say banking company is giving to an NRI account holder, then the location of the supplier. Here it is different. Please see, the banking company's place will be the place of supply. Next, transport other than mail or courier, goods transport. If you're transporting something, but not from mail or courier, then the destination, wherever the goods reach, that will be the place of supply. Passenger transport service from India to US you're going. Where do you start? Embark on journey. That will be the place of supply. Services on board a conveyance. On board a conveyance means what? You get into a flight. In flight, they'll give you food, water, anything that you need, right? That is services on board a conveyance. In the conveyance, right? So, first scheduled point of departure of that conveyance. Let's say the flight is scheduled from Bangalore to California, example. So, Bangalore first point, second point will be Delhi. You are embarking in Delhi, you are actually getting in Delhi, but the full schedule is what? From Bangalore to California, right? So, the first scheduled point of departure is Bangalore. So, Bangalore will be the place of supply. Cool. Now if it is OIDAR, let's say, or you get all this Amazon Prime, Netflix, and all of this. Netflix is a best example for this because the supplier is outside India, the recipient is in India. So, in that case, the place of supply will be the location of the recipient, that is mine. So, here what do you see? You will see whether the recipient's address is existing on records, or banking address, or the card through which I make payment. In that also address will be there. That address, if it is India, then the place of supply will be mine. Okay. Now, through internet, then my IP address, if it is in India, then the place of supply will be the recipient of the service. The billing address, if it is in India, IP address if it is in India, bank through which I'm making payment, that is in India, and if there's any fixed landline through which the service is received, or country code of the subscriber, if any of these two things should be available out of this, then the place of supply will be the location of the recipient, that is India. Okay. Now, in order to prevent double taxation, if at all there is double taxation, then government can notify certain schemes, or they can notify certain any rules or any sections to avoid double taxation. Means any transaction which is getting taxed in India and outside the country, it need not be taxed twice. So, the government will come about with certain treaty. Okay, it will give you certain benefits. If it is taxed here, it won't be taxed outside. If it is taxed outside, it won't be taxed in India, or you can take foreign credits. So, a lot of things that they just say, you can, government will come up with certain rules or whatever is required. Okay. So here we are, done with our chapter, and I've just tried to keep it very, very, very quick because this is just for a quick revision, and I hope you'll be able to cover this whole chapter one day before exams in a quick, fast, easy, effective manner. All the best and take care.